Is it time to be bullish on Bitcoin? In this video, I'm going to be taking a look at the macro view for BTC, taking a look at not only the charts, but the on-chain data as well, and giving my thoughts and opinions on what I think is being set up right now for Bitcoin. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tapping the bell, selecting all the notifications will mean that you will not miss another video update. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this one, right? So I do want to talk a little bit around the on-chain data, but I don't want to start there today. What I want to do is I want to talk about kind of what's going on the daily timeframes. Now, you can see here that we have set ourselves up with these higher highs and these higher lows, right? You can see these right in here. And essentially what this is doing is it's creating this kind of idea that we are getting momentum to the upside. And it's not actually that far wrong. On this particular occasion, we are actually looking at something quite interesting. It's an interesting setup for Bitcoin. Now up here, you can see that we've area, just this yellow box area, 26,700 to 28,805 was previously a demand area. Basically, this is where people were buying. You can kind of see it right in here that taps into this range, bounces again from here. Again, just for here, before we broke down, we bounced from this low area, right? So this is an area where people were buying. Now, we're back up in this area, this previous area that people were buying, and we're maybe trapped in. And what we've done here is we've actually consolidated in this range. And this is actually quite unusual. Normally, from a buying demand zone or a selling supply zone, what you tend to find is you're only in here for a very brief moment of time. And the consolidation here is actually giving me hope to think that actually there's a potential push a little bit higher before we see any form of corrective action. Okay, so this normally would be rejection straight away, but this consolidation is basically telling us we're hitting a little bit of resistance up here, but it's not enough to kind of push the price down into these lows. Now we have to ask ourselves many different questions at this point as to why are we consolidating in this range? Is there really that much demand in this little pocket of space that's keeping the price buoyant, or is it all being manipulated and just keeping us at a point ready for a bigger move to the downside? Now, I'll leave that for you guys to kind of decide after I go through some of the on-chain data to kind of talk about that in a little bit more detail. Now, before we kind of get onto the on-chain data, I do want to reflect on the stochastic RSI. Now, the stochastic RSI is basically a momentum indicator. It shows us the strength of a movement, either up or down, bullish or bearish, right? It's not precious over which one of those you look at, but if we were to take a look at this on a weekly time frame, we do see some interesting things that are occurring. Now, you can't really use time as a good measure, but it gives you a rough idea, okay, of how long you can be overbought or how long you can be oversold. It's not an exact science by any stretch of the imagination, but it gives you a bit of an idea as to kind of whether or not you're above the average time spent in overbought or an average time spent in oversold. Okay, so if we take a look at this, we can see that over here in 2019's movement from March over towards July, it was 119 days we were overbought before we went down, okay? Then there was 28 days up in the overbought area, 91 days, 70 days, 77 days, 7 days, 77, and at the moment we've been up here for 70 days, okay? And likewise at the bottom here, you can see 77, 28, 28, 133, 63. So you can kind of get the idea that really around the 70 to 80 day range is kind of where you want to kind of be thinking about your average time spent up in an overbought area or an oversold area. It can fluctuate. It can be a short period. It can be a longer period. But, averagely speaking, you're talking around 70 to 80 days. So why is that important? Well, it's important because obviously we're up here for quite a significant period of time, and that could be something that we need to consider and we want to be bullish, right? And this is on the weekly time frame, not so much the daily, but the weekly. Now, if I come out of this, you can kind of see where we sit on this weekly time frame. We have pushed up higher than expected. Pretty comfortable to say that it was a bit unusual the way that we have moved up here. Now back into our daily time frame, okay, we can kind of acknowledge that we can see that this area that should have been resistance doesn't appear to be so, and therefore we have to consider what's going on there. But we do also have to consider that we are in the oversold territory now on the daily time frame. This is indicating that there's going to be an upward momentum move. But it's not just the daily time frame, it's the 8-hour, the 4-hour almost, and the hourly. This basically tells us that we should be expecting a bit of a push to the upside. Now, if I come down to smart money concepts and just come into my hourly chart, this is the one that I was talking about this morning. You can kind of see right inside here that we still have this potential move and this break upwards from our triangular wedge towards that $30,000 level, right? So over everything that we're kind of talking about here, it does look like there is a short-term movement to the upside to be had here. That being said, I'm not overly confident that this isn't a big trap of some sort either. Everything is a little bit too neat and tidy, and it's a little bit unusual at times. So let's jump down into the on-chain data and take a look at what's been going on there. Okay, so up here we can see we have 2.9037 million Bitcoin going onto the exchanges since the 1st of January 2023, and we've had 2.8901 million coming off the exchanges. This means that 13,000 Bitcoin remains on the exchanges still. So it's an interesting take. Now, the reason I want to talk about that is if we take a look at where we were back in basically 2019, 1st of January 2019, for the same time period. So basically 1st of January 2019 through to the 8th of April 2019, well, we can see that we have vastly different amounts of Bitcoin. So just take a look at our current situation, 2.9 going on, 2.8 coming off. And over here, we can see 4.75 going on and 4.71 coming off. So one of the reasons I'd like to talk about this, it really highlights the volume difference that's occurring right now. Okay, for the same time period, the start of, or the end of the previous bear market and the start of the next bull market, we had nearly 1.9 million more Bitcoin being transacted upon than what you've currently got right now. This shows us that there is a lack of participants potentially. Yes, Bitcoin is slightly more expensive now than it was before, but again, I don't think that really is a idea of as to whether or not you can use that as a reason or a rationale behind it, because we do have a significant number of increase in participants. So although Bitcoin's price is higher, there's a lot more people in Bitcoin now. If you just take a look at the wallet counts over the duration of the years, I think ultimately really what's going on here is there's a lack of money from certain types of individuals that is basically not pushing the price of Bitcoin into these kind of volume numbers that we would be normally expecting to see. So I do like to kind of just point out that, you know, bull run to bull run, if that's really what you want to call this right now, the volumes are very, very, very different, although the setups are very similar. Okay, so we have very similar setups in the way that there's a lot of transactions going on, and actually it's a pretty balanced market. We're not seeing a lot of demand coming in, but we're not seeing a lot of supply coming in. This is pretty much exactly what it was like back in 2019. The only difference is the number of Bitcoin and the number of people is significantly lower than it was previously. So this doesn't give me a huge amount of confidence in thinking that a bullish market has started. Now, when we start jumping into the wallet counts and we start thinking about, okay, well, where is the money coming from right now, and why are we holding in this range, right? Why are we holding right up here in this what I would expect to be a supply range the way that it is, and why is our stochastic RSI momentum indicator giving us these kind of signals to say that we should be pushing up higher? So when we take a look at this, we can see that retail has really FOMO'd in, right? They fear that the bottom is in and they're missing out on a fantastic opportunity, right? And so you can see here with these black lines are essentially the number of wallets that have a specific number of Bitcoin in them, right? So over 0.1 Bitcoin up here, you can see that we have 4.3 million wallets. And over on the shrimp side of things, which is 1 Bitcoin or more, we can see that we have 993,000 Bitcoin. And then over on the dolphin side, which is 10 Bitcoin or more, we can see that they've actually had a small pullback, and there's 155,000 of those. And I tag all of these together as retail investors because they act emotionally when it comes to price action. We can see this when they are buying up significant pumps. For example, you can see on the krill and in fact on the shrimps here that there was a significant dip in the number of wallets that had over 1 Bitcoin, right? You can see it here when price was $22,000. And then you can see them buying up right over here again when it was $27,000. This is basically saying that you are selling low and buying high, the opposite of what you should normally be doing. And this is just because there's an emotional reaction to price movement. Oh my God, I made a mistake. I have to jump back in. FOMO, FOMO, FOMO. And so it's important that we understand that these three-sized wallets, they overreact. They do not act logically. They act emotionally. Okay, and that's why we see very significant surges with these wallet counts. Now, the reason that I talk about this is when we talk about the price action and we see that price is basically, if I can get my mouse over here, and consolidating down in this range, we know that the money coming into the market is coming from retail investors, which means that in a balanced market, there's also got to be equal numbers of sellers, right? If we want to be trading sideways and prices to be balanced and static, then there's an equal amount of buying and selling occurring, right? So if we come back into our wallet counts and we know that retail is providing the money to buy Bitcoin, well then, where's the Bitcoin coming from? And that's your institutional level investors, your professional traders, billionaires, your multimillionaires, your institutional market makers, etc. Right? So what you can do here is you can see that Bitcoin sharks over 100 Bitcoin per wallet has been significantly decreasing. And you can also see that the whale wallets with over 1,000 Bitcoin has been significantly decreasing. That there is an increase in the Kraken size wallet, okay, which is 10,000 Bitcoin or more. So you can argue that there's a significant amount of people now kind of, accumulated over 10,000 Bitcoin, or that this is all manipulation and there's something big about to occur. I'm kind of thinking that we probably will hit 30K and then drop like a lead balloon, in my personal opinion. I think there's going to be a lot of liquidity to be grabbed at about $30,000. So what I can say here, is that big money is exiting the space, but small money and retail money is coming into the space. And this is usually a recipe for disaster. Now, the Kraken size wallet can give people a ray of hope. However, this particular level of investor isn't necessarily got your best interests at heart. They don't just accumulate Bitcoin and drag the price of Bitcoin to the highs without, some kind of casualty from a retail investor. At the moment, those casualties on the retail side just haven't really been seen. And that's my big worry. If we take a look at what happened to these Kraken-sized wallets in 2018, this is what happened. They created the bear market low by dropping, I say dropping, that's probably not the right terminology, but basically by flooding the market with excess Bitcoin, because supply and demand, it gets imbalanced, right? And if there's too much supply and not enough demand, price will go down, okay? And this created panic. You can see the panic that gets created when such a thing occurs. Now, you can see that they did get up to 126 wallets before dropping, okay? Where are we right now? If I take a look at the 365-day view, you can see that they are coming up here to 121 wallets. Okay, they've been accumulating during this bear market in a very similar way as to what they did in 2018, accumulating through the bear market. And what we're waiting for is we're waiting for this move for flooding this system with Bitcoin to drag that price down. And I think where we are right now essentially is that we're seeing all the manipulation dragging the price of Bitcoin to the highs. And I think we're going to see that lead balloon drop, and I think we're going to see a significant drop in the price of Bitcoin. We can take a look at the retail wallets, we can take a look at the whale wallets like this one here, and we can see significant downside. These guys have been coming out of their Bitcoin positions pretty much the duration of this bear market. They were selling the November lows, they were selling the June lows, right? And essentially it's hard to think that these whale players, these people who are known for manipulating the market, are making a catastrophic mistake by selling the bottom. So essentially, when I take a look at the wallet counts and I take a look at the psychology behind how these people operate and how retail operates, I'm not confident in thinking that what we're seeing in these price charts is actually giving us an accurate representation of where Bit price is going to go. I do still see that there is a potential move up towards this $30,000 level, but ultimately, I don't think there's much more room above and beyond that before we start to see a next move down. Let me know what you think the catalyst for that is going to be. What kind of black swan event do you think could be on the horizon next that could drag the price action of Bitcoin into the lows? Let me know your thoughts and opinions in the comments down below. I'm going to leave this video right there. If you have found it useful, informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will not miss another video update. And if you haven't yet joined us in Discord, check it out, guys, linked in the description below. Until the next one, though, have a fantastic day. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.